Hi, this is Raman Gill. Welcome to episode 70 of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we will take a look at my favorite pattern, a pivot point trade. I will show you what pivot point trades look like, how to place a trade based on this type of a trade setup, where your stop loss needs to go, and where to exit the trade with a profit. So let's go on to the charts now. We're looking at a pivot point trade setup. This is pound US dollar 5-minute chart. In a typical pivot point trade setup, we tend to see price move from one pivot point level to another. So in this case, we have price going into R1 and from there dropping to pivot, the daily pivot, and then finally into S1. And this is a typical move that we see with pivot points. So let's dig into this trade. We have pound pushing up, a price goes up, tries to break through the R1 level for our pivot point, then pulls back and starts to hold below our R1 level. And here we see that the price tries to push through again, but is not able to hold above the R1. So this will be a point where we can take an entry. And also we see that the price is making a lower high than the previous high. This is a good indication that price is likely going to go lower. So in this case, once we see a nice bearish candle close like this, we can enter our trade on the close of the candle. The stop would go above the high, making sure we give it some room for trade to breathe. And then we stay with the trade. The first target in such a case would be our daily pivot level, which will be the green level here. And then the next target would be our S1 level. In this case, price comes into our daily pivot and then pulls back. However, as we can see, price does not go back into that previous support and resistance level. It holds below that level, which is a good sign, and this shows that price is likely to continue lower. And as we can see, price holds the resistance level and then drops further. In this case, there's two ways to exit the trade. One would be just to set the target at our S1 level, or the second option would be to wait and see what price does at S1 level. In this case, as we can see, price starts to trade sideways, and so this is a good time to close the trade. Also, we are getting late in the day, and generally in the afternoons price tends to pull back, so this would be a good time to exit the trade. So from our entry to exit here, we have 67 pips in the trade, which would be a profit of $670 if trading one standard lot. So just to recap here, this is our typical pivot point trade setup. Price goes into our R1 level here, makes a lower high, so we can enter the trade once we have a nice bearish engulfing candle here. We enter the trade, stop goes above the high here, and we stay with the trade. The first target is our daily pivot level, which is the green line. Second target is our S1 level, which is right here. Once price starts to go sideways, we can exit the trade. The profit in this trade from entry to exit here is 67 pips or $670 if trading one standard lot. I do have a special announcement to make. I'm launching a new course called Demystifying Forex Fundamentals. One of the things that I've noticed is a lot of retail traders, we don't understand the fundamentals too well. I know most people look at the Forex Factory news. However, most people I find do not have a good understanding of what the news means and how the news drives the market. Over the years, I have picked up a lot of concepts through different courses I've taken and also through my MBA. So I feel like this is something that's missing in the market at this point. And to rectify that situation, I am launching the course called Demystifying Forex Fundamentals. And in this course, I will be going over not just the COT that I normally talk about in my weekly analysis, but I would also be talking about how to gauge market sentiment. I will be looking at how to understand the news reports that come out. What does CPI mean? What's GDP? And how does that impact the markets?
how do the interest rate decisions impact the market. We'll also be looking at leading indicators and what these indicators are and how we can use them to make better trades. We'll look at intermarket correlations as well as currency correlations. We'll take a look at how to use equities to trade Forex as well as options data to take better trades in Forex. We'll take a look at US dollar index, as well as we'll take a look at different country profiles and also looking at what impacts their currencies. And we'll also take a look at carry trades. So the price for this course will be $397. The course starts on April 1st, 2017. However, I am doing a pre-launch right now. And if you'd like to register for this course at this moment, the price is at $250, which it will go up in a week. For more information about the course, please visit tradingwithvenus.com/fundamentals. Thank you so much for joining me today. If you like this episode, please like, comment, and subscribe below. As always, it was a pleasure sharing these trades with you, and I will see you on the next episode.